If the government and the Fed can print money on command, why do we have to pay for a mortgage?
Ever played a video game and stumbled upon an infinite money cheat code? You type in a few characters, and suddenly your bank balance is a string of nines. Sounds fun until the game becomes boring and completely broken. Well, in March 2020, something similar happened in the real world. The US economy was crashing, and the government responded with $2.2 trillion under the couch cushions. Even the Federal Reserve promised to buy an unlimited amount of debt. It looks like the ultimate glitch, right? But in the real world, there's no reset button. You really don't want a politician who's running for re-election to have a literal print button on their desk, because every campaign's promises would sound like this.
Free money for everyone. Luxury for all.
Sounds amazing, until you realize that if everyone is rich, no one is. That's why central banks are the designated drivers of the economy. They stay sober and manage the money supply, so the government doesn't get too carried away with the free money. But wait, if they have the power to create cash, why don't they just do it to fix every problem? Let's say a slice of pizza in a normal world costs $5, but if the government prints $1 million for every citizen, do you think the pizza guy will keep the same price? Of course not. That pizza might now cost $500. Suddenly, you're lugging a wheelbarrow of cash just to pay for the extra pepperon. That's the inflation trap. It's why printing money doesn't make a nation richer. It just makes money worth less. So, how did the Federal Reserve Board move trillions in 2020 without the pizza guy charging a fortune? Instead, they used something called quantitative easing. Quantitative easing is basically the professional way to print money while keeping a straight face. The Fed creates digital money, then uses it to buy government debt. By buying so many bonds that the price skyrockets, the Fed effectively forces interest rates down. And when borrowing is cheap, people and businesses spend more. They're basically shouting at the world.
Hey, borrowing is cheap. Go take out a loan, start a business, and keep people employed.
It's a way to sneak cash into the economy's veins so the government can fund those stimulus checks without the immediate pizza inflation meltdown. So, was this a genius move or the start of a long-term problem? Some say it saved the economy from collapse. Others say it's slowly breaking the system. Either way, there is no true infinite money glitch. Even with all that digital magic, someone eventually has to account for the bill. I'd love to stay and dive deeper into macroeconomic theory, but I need to go check my bank account for that stimulus check.
At this rate, it'll probably only cover the cost of a dozen eggs. See you next video.